For remaining with us. You're watching Financial Markets, and this is Smart 24, where we drive your business. Remember, we also have Altex East Africa here with us, our partners here with, of course, Financial Markets. They are an exchange also based here in Uganda. Together with Altex Clearing, Altex East Africa has come up with an initiative that has been dubbed ZABU. And this initiative is to help increase accessibility as one of the tools, of course, to increase the investment into capital markets here in Uganda. And so they're giving you opportunity to also use your smartphone or your mobile phone without need to access the internet by dialing *292#. Doing that will help you to access markets across East Africa. And these financial markets, as you're going to, of course, hear from other people, are not limited to capital markets alone. There are also other markets like the debt market, which of course involve securities across East Africa like treasury bonds and treasury bills, and corporate bonds as well, by the way. So this exchange will help you access all those and purchase them using your mobile money of MTN, that is the Momo Pay. And when you do this, definitely they will be giving you a little bit of information also to learn about the stock market and what you can do to invest. This ZABU initiative was launched early this year at Golf Course Hotel in an event, of course, that was graced by the Deputy Speaker of Parliament, Honorable Tayewa. And this particular initiative, ZABU, was licensed now, of course, now by the Capital Markets Authority, and Altex East Africa right now are licensed to carry out these transactions using mobile money. Simply dial *292# and you will be able to get access to different types of securities. Your preferred bonds, your preferred treasury bills, and definitely you just need to have a little bit of money on your mobile money that you're willing to invest, and they will be able to do just that for you. Talking about the debt market, the debt market is a little different from this capital market. Remember, the capital markets, like we have mentioned, companies come out and they want the public to buy shares. They want the public to be part owners of the companies, and they promise to increase value for your stock, number one. Number two, some companies promise dividends. Dividends are just different percentages of profit that companies part with to give to shareholders as a reward for their, giving them capital. Because as the word goes, capital markets, markets that are used to raise capital for companies. So these companies can reward you through their dividend. They can also give you value for your stock by seeing their price go up, or by any reason, or seeing your value, the money you put in, increase or multiply. And then they can also help you by giving you bonus issues, by issuing bonus shares. Those bonus shares come at a free cost without any money involved, without any additional buying of shares. So what they do is, for example, National Insurance Corporation recently, instead of issuing a dividend in terms of money, they said, hey, no, let's do a bonus issue. So for every share, we're going to give you 2 more shares. Meaning if I had maybe 100 shares, maybe I'll have 250. Yeah, they give you a little extra shares for free. That is what they call a bonus issue. There's a rights issue where a company gets to issue more shares, but for buying at subsidized prices, but for only shareholders. And definitely gives you opportunity as well as a shareholder to own more at a less price. And several companies have participated in some of these, activities. Being able to we have seen all these happen on the Uganda Securities Exchange. And so, yes, the Altex, in conjunction with the Uganda Securities Exchange, you can do a lot right now on the stock market and in other securities. Talking about the debt market, I've not forgotten about that. Now, the debt market is a little different from the capital market, as I've said, but the debt market is quite simple to deal with because it's a risk, almost 100% risk-free. Here is how it works. The debt market is simply a market of borrowing. Literally, governments or corporate bodies come out to borrow money from the public and use that money and then give you back the money with interests over a certain period of time. Now, when it comes to government borrowing, government borrows in the long term and in the short term. When it's borrowing in the short term, we call that a treasury bill, a loan to government. A short-term loan to government is known as a treasury bill. And this treasury bill lasts for either 3 months, 6 months, or 12 months in a maximum. And the shorter the time, the shorter that comes with that, the smaller the interest, that comes with that particular instrument. Now, this instrument of the treasury bond works in a way that, of course, for all treasury bonds and bills, you need at least 100,000. So you go to your commercial bank, you say you want to buy a bond in a bank, or you go to a stockbroker. Some brokers have elements of these other financial instruments. They can help you buy these other securities like the bonds and bills. You say, I want to buy a bond. And of course, these bills, especially, they're auctioned every after 2 weeks. Every after 2 weeks, Bank of Uganda comes out with an issue of new bonds, new bills for the public, because government is in continuous need of money. And to reduce on the foreign borrowing, these Chinese who are lending us money and all, that is causing countries to be distressed by debt. They say, hey, we have our locals here in Uganda. They have money. They can lend us this money. We use it as government. And since government, of course, collects taxes, they pay back with time. Yeah, so they pay back with a very attractive interest there for people who have been able to borrow. So maybe government issues a bond. Let me give an example of 220 billion. Yes, because they're usually big figure, bonds. So you have 220 billion that are issued on a certain date. And on that date, there's auctioning. Definitely, the different stakeholders come around, including fund managers. We have banks, commercial banks, some stockbrokers, and so on. They purchase this bond on your behalf. And definitely, they go and say, hey, we have this bond. You can also participate. And so you get that money, that 100,000, to buy a unit of that bond. If you want maybe 2 units, you can buy at 200,000, at 300 if you want 3 units, and so on. But the minimum you can buy is 100,000. Now, when you are able to purchase that bond, for example, the bill, you have to wait for 3 months for the bill to mature. When the bill matures after 3 months, definitely you will find your money back with interest. Usually, when you look at the bills, they maybe have very much smaller interest because they are literally very short. Maybe you find maybe 4%, 6%, maybe 8% maximum. But then when we look at the treasury bond, it works in a way that we have a 1 year, actually we have a 3-year bond, and then we have a 5-year bond, we have 10-year bonds, and we have 15 and 20-year bonds. These are longer term and definitely come with a bigger interest called coupons. This coupon has a coupon, and that coupon rate appreciates after 6 months. Now, what does it mean? Every after 6 months, you're going to be paid a specific amount of money you are able to buy. And this includes, if it is a bond of 17%, and you give a government maybe $1 million shillings. Now, 17% of $1 million shillings, if I'm not mistaken with my calculation, is 170,000. Now, imagine yourself, you have this 1 million that maybe you have been keeping at the bank. Maybe you're not going to need in the next 3 years or so. You say, hey, let me just invest this money in these treasury bond. And maybe the bond is 3 years. Now, let's put that in terms of figures. Every 6 months of those 3 years you bought that bond at 1 million, you're going to have 170,000 income every 6 months. Every 6 months. I mean, every 6 months. So you come out 6 months, you have 170,000. Then at the end of other 6 months, you have 340,000. At the end of maybe 18 months, you have another interest. And then at the end of the 3 years or 5 years, you have back your 1 million after getting all these interests along the 3 or 5 years. This is the way people are making money nowadays. You don't always have to start a business. You don't always have to construct rentals. You don't always have to, buy land. There are options, and these are the options that the financial market space provides. And so these bonds or bills are what we call the debt or equity, the debt market actually. And then the stocks, the stock markets in particular, we look at the equity market. And equity that literally means shares, or the share market, where we see people buying and selling shares here and there. Now, the bond, maybe you may ask, is maybe long term, 3 years, 5 years. What if along the way you feel like, you know what, I really need back my money and I want to sell this bond? It's possible. But that comes with, of course, the help of a stockbroker. As you're looking at selling your bond before it matures, there's another person who was not interested at the beginning, when the bond was being issued. But now they have been watching Smart24 and probably they have learned how everything works and they want to access that bond. They can go to the stockbroker and say, hey, I need a bond out of this bond that was issued in 2017. It's 2022, but I need a piece of it. And then the stockbroker, of course, you already informed him that, hey, I want to sell this bond I bought because I think I need to attend to my sick grandmother in the hospital and I need this money back. So what does the stockbroker do? He makes the two of you have a deal. You have a deal with the stockbroker. You come together, you say, that's the role of a stockbroker. He knows exactly who wants what, and he has exactly what they want. Yeah? And definitely this person will be able to exchange the bond with you. You give them the money, maybe 100,000, maybe $1 million that they invested, and if that's what you want exactly, you have a deal. They sell this bond to you. Meaning after that period, the interest that has been going into this initial investors' pockets are now coming to your pockets. And at the end, or at the maturity of this particular bond, we are seeing that also the interest, the initial deposit will come back to you. See? So this is a liquid market. It is something very many have been able to benefit from, much as it has not been publicized around. And this is exactly what Smart24 TV is doing, to inform you that there are quite many business ventures you can go into, but you don't have to participate in all of them to make money. For example, in this market, you don't have to go and see how government is going to use this money, maybe how it's going to invest in building roads and hospitals and schools. You don't have to. All you have to do is put your money there and then you wait for the interests. You wait for the interest, then at the end of the maturity period, you wait for your initial deposit. Instead of keeping that money in that box for your savings group, instead of keeping that money for your family savings under your bed, instead of making yourself, that money lose value, because every time a country has a lot of money, but that money is not making more money, the currency depreciates. That's why what we are seeing, maybe just to give a radical example, really it's not what's happening, but I'm just giving an example. The euro recently has been seen to go down, and almost the prices are relative to that of the dollar. Yeah. And that definitely is attributable to probably the Russia-Ukrainian war as well, but to a large extent, it means the currency losing value, money is not being made use of to produce more money. Money has to make money. That's the way money gains value. The moment money is not making more money, that money is losing value. And that is what that money you're keeping in the box, that's what the money you're keeping somewhere with the savings group that is just using the box to keep the money is doing to your money. It's making it lose value. By the time you come out with that money, it will not be able to purchase the things it would purchase putting it into that box. And that's why you need to wake up and start your investment journey. And definitely, if you want more of this information at Smart24, and in particular on this show in financial markets, we will be bringing you experts in this field. We promise to bring you the regulator, the Capital Markets Authority, people from the Uganda Security Exchange, from Maltex East Africa, people from the stock brokerage firms around, people from the financial sector itself, to just elaborate more of this. And definitely, I can't make it more pronounced, but the fact that Uganda is a growing country, we need to wake up and start investing our money. Our savings have to make more money for us if at all we are to be able to benefit. Now, definitely that was a little talk about the background, and definitely if you want more, you can visit our website as well at www.smart24tv.com for more information regarding this. But for now, let's move into the stock market. Back to the stock market that opens every Monday to Friday at exactly 10 a.m. and closes at 1 p.m. The market is open right now. You can contact your stock broker if you would wish to trade on any of these stocks. If you would wish to trade on the stocks you've seen here, or any company that you feel like is going to grow any soon, you can get to reach out to your stock broker as soon as you hear this. But now let's look into Jubilee Holdings. He came out on top yesterday, but what has been his performance in the recent past? Now, on this graph here in particular, you see the performance of this particular stock since September 2021 to the year 2022 in July. And this particular graph gives you a little bit of how the prices have been moving along those weeks. And on average, if you can see, we're seeing a decrease, a slight decline, a little bit of decline, in average decline in the curve in these past 20 months. And looking at the beginning of September, we had prices ranging between 10,000 and 11,000 and maximums of about 12,000 in 2021. This is on this particular stock of Jubilee Holdings Limited. But the prices were not that turbulent. We see that they actually were a little bit stable in the year 2021 till around November. And we see that in November, we started to see a steady decline in these prices until January 2022. Now, in January, the decline was even further aggravated by probably because of various factors in the market, especially in Nairobi, because this is a listed equity from the Nairobi Securities Exchange. Definitely factors affecting the Nairobi, the Kenyan economy could affect the stock as well. And one of the things that stood out as challenges on the Nairobi Stock Exchange was the number of foreign investors that were liquidating and moving out of the market. And so that affected gravely the markets because they have a very big percentage of foreign investors, just like us here. Over 48% of our investments in the capital markets are foreign. So you find that whenever there's a fear of maybe inflation, like we are seeing, whenever there's a fear maybe of a war or an election like we are seeing in Kenya, the investors definitely will sell very quickly. And in that selling, because there's a lot of supply, they create a lot of supply, we see that the prices move down. And this is what we are seeing at the beginning of the month of January. And that is in this year 2022. We see a decline in price subsequent of these factors that were affecting the economy at the time and are still affecting it at the moment. But we see that the price later leveled off kind of at 8,000 Ugandan shillings in the month of March. It became a little bit stable with a very low, a small low here in the month of April. And then we see that it leveled off again at 8,000 and has been hovering around 8,000 for the past 3 months. Now, just yesterday, I'm just talking about, Friday, just as of Friday, we see a 3.8% increase in stock prices. Now, for starters, what does this mean? Now, we see that this 3.8% was as a result of an increase in price of 303.3 Ugandan shillings, meaning the price went up by 303.3 shillings, and the price moved to 8,275.8. What this means literally is that the buyers who bought the day before Friday were able to make 300 extra shillings, yeah, on every stock. Meaning if I bought, maybe let's make it radical. If I had 1 million shares in Jubilee Holdings and I sold them on Friday by closing the market, and I found someone who was willing to actually buy at this particular price, all those shares, I would have a gain of 303 million. That's what it means. But definitely because of factors of, the activity on the market, you may not find someone willing to buy all the million shares at once. Maybe you find people willing to buy 10, others willing to buy 20. And this is the role of a stockbroker, really, to be able to get the clients their respective buyers, if you would want to sell your stock. But we see that there was a gain of 303.3 Ugandan shillings on this particular stock, and that's significant, even if there was no trading in this particular stock. But we see that this change is significant for the prospective investors. So we look into a stock, you look at the current price, but you also look at the history before you invest in that particular stock, because it informs your decision on how this market moves. You can see that this is quite a stable kind of market. We see that the prices don't change a lot. If it was 1,000, it will remain 1,000 for quite some time, and then decline, and then we see 8,000 for so are you willing to wait? Are you willing to wait that long? If you're not, then this is not the best stock for you, because it's quite stable. Yeah, if you're short term, you definitely don't want to invest in some of these. But definitely in the long run, if you're investing in the stock market, you ought to be a long-term investor. Like all people will advise, the sun will always shine after. Yes. So all these companies could go up and down, and but still somewhere in the future, you'll see value for your stock. You'll see your companies gaining and definitely coming out big. And now looking at Jubilee Holdings Limited, it's a company that definitely started in Kenya as an insurance company, and we see that it was listed on the Uganda Securities Exchange in 2006. And Jubilee Holding started in Kenya. It started its operations in the year 1937. So it's well above 80 years, about 88 years of existence in the East African region. The company's operations in Uganda were revived in 1992 by the formation of the Jubilee Insurance Company of Uganda, together with the Aga Khan Fund for the Economic Development, International Finance Corporation, as well as the Development Finance Company of Uganda Limited. Jubilee Holdings is one of the leading insurance companies in Uganda. It trades under the ticker symbol. When you talk about a ticker symbol, we are talking about the representation of a particular company on the stock exchange. And on the stock exchange, you will not find Jubilee Holdings. You will only find JHL, and that's the ticker symbol that it trades with. It also has an identification, securities identification number. This is just an identity. For example, like the way you have a national ID with an identification number, you also have companies with respective identification numbers called the identification securities numbers. Now, this is KE000, a couple of zeros, and then 273. The Jubilee Holdings is currently the 8th most valuable stock on the Uganda Securities Exchange, with a market capitalization of 496 billion Ugandan shillings, which is about 2.3% of the Uganda Securities Exchange. So we are talking about an exchange that has a total market capitalization of about 21 trillion, well above that. Yeah, and the Jubilee Holdings is the 8th most valuable, standing at 2.3% of just that, and that's 496 billion. When you talk about market capitalization, is the total value of shares on this particular stock market. Now, looking at the current trading results, when you look at those trading results, as you can see, we have over 59.9 million that are shares that are outstanding, meaning the company has listings of over 59.9 million shares, and the current market capitalization is at 496 billion, meaning when you multiply the share price by 59.9 million shares, you have a market capitalization which is 496 billion. So to get the market capitalization, just get the shares outstanding multiplied by the current price. Definitely the figure that comes out is the market capitalization. Jubilee Holdings deals in the financial sector, and looking at the people that are competing with it, we have 7 other stocks that are competing with Jubilee Holdings Limited, and we have National Insurance Corporation, who comes at 8.49%, 8.49 billion Ugandan insurance market capitalization. We also have DFCU at 411 billion. We also have KCB at 3.85 trillion, and a couple of other people dealing in the financial services sector. That was a little bit about Jubilee Holdings Limited. Is it a tradable stock? Well, yeah, but still we can see because of lack of much activity, it will be difficult for you to find a buyer on the market, and you don't want that as an investor. You want a stock that has buyers, that where you know that in case I want to move out, I can easily find clients who want to buy my stock. But in terms of stability of the price, it's good. It's really stable. You don't see much fluctuations like in other stocks. And definitely, if you would want to invest in insurance, it's an option to consider. But yeah, it depends on your financial advisory team. It depends on your finances and how much you're willing to put aside to invest. It's quite an expensive stock. Looking at 8,000, that is quite a lot of money to invest for one share. With companies like National Insurance, at 6,000, you already have 1,000 shares. So, you know, you can determine how you want to trade based also on how much you have, how much you can afford. Can you afford this stock? If you cannot afford a certain stock, please don't trade in it. You will make losses because you're already struggling, and then you trade in a stock that is quite expensive, and things don't turn out so well. But definitely that was the Jubilee Holdings who came out on top of the market. We had Uganda Clays come in the second position, and we're going to look at Uganda Clays definitely after the short break that we're taking. We'll also look at the bottom losers as well and analyze their performance as per the last 10 months. Stay with us. You're watching Smart 24.